Welcome. In this video, has XCN coin started to rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. One of the first elements that stands out upon careful analysis of the chart is a previously formed minor upward trend line. This small trend line has acted as a support during short-term price movements and has served as an important structural component in determining the direction of the price. In particular, this trend line has provided a foundation for short-term investor confidence and offered insights into market direction. Now, it can be observed that this minor trend line has been broken to the upside. This breakout has given the first positive signal in the price movement and has signaled a potential upward acceleration. The break of the minor trend suggests that short-term downward pressure has been overcome, buyers have re-entered the market, and there is potential for the upward move to reach a higher level. The price moving above this small trend line also signifies an important shift in market psychology. Such short-term trend breakouts often increase bullish expectations among investors who follow technical analysis. Naturally, this can lead to more buy-side positions being opened. At this stage, with the small trend line now turning from resistance into support, the price has established a new base and has started to move toward higher targets with support from this new level. However, from a technical perspective, another notable element is the presence of a larger and more long-standing primary trend line on the chart. This major trend line represents the market's longer-term direction and is a key structure closely watched by many investors. While the break of the minor trend is a positive sign, seeing the price now approaching this major trend line presents a highly exciting scenario in terms of technical analysis. If this major trend line is also broken to the upside, a much stronger and more sustained upward move could be triggered. The fact that the price is approaching this major trend line indicates a significant shift in market dynamics. Should the price manage to break through this critical technical barrier, it would mark a significant breakout not only technically but also psychologically. This long-standing resistance level is seen by investors as a turning point. When such key levels are surpassed, the FOMO effect often kicks in, increasing market participation. This in turn leads to a surge in trading volume and more aggressive upward movements. Such major trend breakouts often lead to rapid price increases referred to as pumps, characterized by large gains in a short period. These breakouts are generally perceived as the beginning of a bullish trend, prompting investors to take more aggressive buying positions. Therefore, the price is currently approaching this major trend line step by step. And if this resistance is broken, it would reach a whole new level, both technically and psychologically. Moreover, the fact that the price was able to break through the minor trend line and successfully hold above, it can be considered a positive early signal that the major trend line might also be broken. The rise that followed the minor trend breakout shows that buyers are gaining strength and that selling pressure has decreased. This sets the stage for an attempt at the major trend line. If the price can maintain its momentum while approaching the major trend line and buyers continue to dominate at that level, an upward breakout of the trend line could lead to new price targets. It's important to remember that in technical analysis, major trend lines play a decisive role in trend reversals or trend strengthening. If such major trends are broken to the upside, not only short-term, but also medium and even long-term uptrends may be initiated. This serves as a strong signal for investors, renewing confidence and shaping new investment decisions. But we can't rely solely on trend lines for analysis. Let's also look at other metrics. Stay tuned. When analyzed within the framework of the Elliott wave theory, the current price movement points to a highly noteworthy structure. Especially when examining the nature of wave patterns, the current price action clearly indicates that the first impulsive wave has been completed, and naturally, the second corrective wave is now expected. This structure is one of the most closely followed and trusted scenarios in technical analysis, as the Elliott theory not only explains past price movements but also provides a serious roadmap for determining potential future direction. In the current scenario, it appears that the first wave has been completed with significant strength. This initial move has helped the market establish direction and has sent a promising signal in terms of an uptrend. The characteristic features of the first wave, sudden, rapid, and clear upward movement, are clearly visible in this case. This is a highly valuable technical signal that suggests investors are regaining confidence, demand is rising, and market participants are optimistic about future prices. Following the first wave, attention is now turning to the second wave. According to Elliott wave theory, second waves are always corrective in nature and represent a short-term breather for the market after the strong move created by the first wave. This corrective phase typically involves profit-taking by investors, pricing in of short-term uncertainties, and a natural pause to reassess direction. However, this pause usually lays the foundation for the strong rise expected in the third wave. Therefore, although the second wave may bring a short-term price pullback, it also presents a period full of opportunity. At this point, Fibonacci retracement levels come into play. As one of the most commonly used tools in technical analysis, Fibonacci ratios provide a fairly reliable guide as to where the correction might end. In this context, the 0,618 and 0,786 levels appear as ideal reversal points for the second wave. These levels have historically served as strong support zones during corrections following major moves. The 0,618 level in particular, known as the golden ratio, holds significant psychological importance in technical analysis. If the price pulls back to these levels and manages to hold, it could lay the groundwork for the strong start of the third wave. Currently, price action may be gradually moving toward these critical Fibonacci levels. This represents a significant opportunity window for investors who can see the bigger picture. The retracement during the second wave is usually limited, and the subsequent third wave is known to be the strongest, longest-lasting, and most profitable move in the market. Therefore, a bottom forming around the 0,618 or 0,786 Fibonacci levels could serve as a perfect launchpad for the third wave. It is crucial for investors to pay close attention to these areas, evaluate potential buying opportunities, and closely observe how the price reacts at these levels. If the price finds strong support in these zones and begins to signal upward movement, this could be an indication that the third wave is near and that a major rally is imminent. Technically, these areas have historically served as key turning points, earning the confidence of market participants. Another important factor at this stage is investor psychology. The pullback during the second wave often causes indecision among market participants. However, experienced investors view this phase not as a threat, but as an opportunity. The largest price movements typically begin at moments of greatest hesitation. When we look at the MACD indicator, we are currently facing an extremely remarkable and positive technical picture. In particular, the fact that the MACD line is gaining a very stable and strong upward momentum relative to the signal line is a clear indication that there is a serious increase in momentum in the market. This type of structure is one of the strongest signals in technical analysis that indicates a strengthening trend and is often considered a harbinger of a strong and sustainable uptrend. Such a sharp upward movement of the MACD line indicates that buyers are strengthening in the market, demand is intensifying, and prices are being pushed upwards. It also means that the short-term moving average is rising faster than the long-term moving average, meaning that momentum has turned completely positive. In technical analysis, such situations are considered not only as instant bullish signals, but also as strong signs that a trend change has begun, or that the current trend will continue in the wider time frame. This behavior of the MACD indicator in particular may indicate the beginning of a bullish trend. This is because indicators usually lag slightly behind price movements, but this strong divergence and sharp upward slope between the MACD's lines shows how deep and potentially long-term the strength behind the price is. It is important to check the MACD lines. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.